Hey, it's Clay, and this will be a video chart on ticker symbol DTRM. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to do this time frame. I think it's a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. I don't mean to state the obvious, but I will anyways. Quite a bit of volume in this one today, so you look down here and well above average than what the chart normally sees. And then the price was all over the place. And I will be the first to admit this is kind of a sketchy chart, kind of shady, kind of confusing. I mean, you stop and think about it. Yeah, the price made a great move, and then there was a pretty big pullback, but it's not like the price totally crashed. So it's kind of, is this a bullish chart? Is this a bearish chart? And, so if you're feeling kind of, what am I supposed to think of this? Hey, I'm with you. But to me, I think we can, or at least in my mind, a level to kind of help clarify whether or not this is bullish or bearish next week is going to be down here at 50 cents. Why is 50 cents important? Well, let's look at a couple different scenarios. First scenario is the price comes down to 50 cents and then breaks down below it. I'm not saying this is what's going to happen, but like I said, we're just looking at scenario number one. What would that be doing to the price? That would literally be putting the price right back to where it was before the big move started. And not to insult your intelligence, but that's, truly strong moves are going to make some sort of progress forward. The price is not going to go back to where it was. And essentially that would put it at pump and dump status, meaning the price made an awesome move, and then within the time span of just a few days, the price is already back to where it started. Like I said, that is the epitome of a pump and dump. Again, I'm not saying that's what's going to happen, but that's kind of why 50 cents is important and why if the price starts to go below it, the price is literally going back to where it was. On the flip side of things, though, let's say the price pulls back here, but then goes sideways and starts to work its way back upwards. What would you have in this situation? Well, you'd have a set of lows right here. You'd have these set of lows down there. If you envision each of these as stair steps, well, hey, now you have stair steps making progress in the upwards direction. And that's what a truly strong bullish move is going to do. So at the core, the 50 cent mark is kind of acting as a vocabulary definer, meaning is the price going back? Again, going back associated with bearishness, or is the price making progress associated with bullishness? So we'll see how the price reacts with 50 cents. But yeah, bullish or bearish, I think in my mind, 50 cents is going to do a good job of helping kind of reveal the exact and true status of this current chart. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.